different products to use within the mortgage market. So why don't you tell me a little bit about the different products that are available?
So as you say, there's a couple of different options depending on what it is that you want to do and what you're looking to achieve from your mortgage. Again, if you are buying your residential home for you and your family, that's going to be different than if it's like a buy-to-let property that you're trying to make money from.
Yeah.
So depending on what route you want to go down, there can be a few options there.
Okay.
But basically what every lender has is a standard variable rate. Now, depending on who you use, they might call it something slightly different, but essentially they're all standard variable rates, and it's their rate to do whatever they want with. They can put it up, they can drop it down, they can change it at a moment's notice. It's the most volatile rate they offer, and it's typically the most expensive rate that they offer as well. Good thing is they offer discounts from that. So you've got a fixed rate, which does what it says in the tin. It's fixed for a certain period of time. So sometimes you'll occasionally get one that's maybe a 1-year fixed rate. You do get ones that are longer than a 10-year fixed rate as well. There's a couple of new providers out there that are doing like a fixed for life. So it'll just be fixed for like 35, 40 years sometimes.
That's not too bad, yeah.
It depends what you're looking to do. So yeah, it's fixed for a certain period of time depending on your circumstances, and it doesn't matter what happens during that period of time, your interest rate will not change. But that's your fixed rates. You've also got your variable rates.
So
your variable rates are linked to things like the Bank of England base rate, and they'll essentially track an interest rate of sorts. So they'll track something. So they can go up and down every couple of months depending on what's happening in the wider world. Now usually your variable rates will only last for 2 years, and then you would review it again at that point, because they can be just a little bit more volatile. So if you've got a lot of excess money in your monthly budget and you can withstand your monthly payments going up a bit, then yeah, it might be something for you. But otherwise, a fixed rate might suit you better if you want that security.
And just touching on other products that are available in the market, there's not masses amounts of them, but we've got things like cap and collar.
Yes.
Yeah.
So your capped and collared rates work on a variable rate. Essentially what you'd have is a cap, which is kind of like the top, so as in like a cap on your head, that's as high as interest rate would go, and then a collar, as in the collar of your shirt, is the lowest it would go. So even though your monthly payments could change, there would be a set limitation.
And obviously that tracks the Bank of England base rate. Can be a way to reduce the amount of interest you pay, would you say?
Possibly, depending on the circumstances, but it depends if interest rates are going up or coming down.
Yeah, that's it.